How do I actually pay myself for my UAE company without getting flagged? Do I really need to register for corporate tax even if I'm under the threshold? Or is it better to set up a free zone or mainland for my specific business? Well guys, these are exact questions that flood our inbox every single day. I just met with a client yesterday who's been living in Dubai for 3 years already. Brilliant entrepreneur making over 2 million annually, but when I looked at his setup, he was still paying over $400,000 in taxes every single year. And the worst part, he thought he was doing everything right. Well, today I'm sharing the exact answers that help my clients slash their tax bills, avoid bank troubles, and scale their businesses without getting blindsided by regulations that nobody warned them about earlier. And these aren't just random tips, guys. These are the answers to the 5 questions that literally every UAE entrepreneur, everyone, needs to know in 2025, whether you're starting out or already running a business here. Hi, my name is Arturo from Emifast, and we help entrepreneurs maximize their income and minimize taxes with smart global relocation strategies. And visit our website on emifast.com to explore our resources or to talk with one of our consultants. We're really happy to help you. We have helped hundreds of business owners and investors, by the way, set up property in the UAE. And every day we see the same patterns. People leaving money on the table because they didn't structure things correctly from the beginning. So today, I want to break down the 5 most powerful UAE strategies that almost no one talks about. Not your typical move to Dubai, pay zero tax advice. We're going way deeper than that, I can promise you. So the first question is, do I really need to register for corporate tax if I'm under the threshold? And this hands down the most common question we get. And it's critical to get right. And the answer is yes, 100%. Every UAE company must register for corporate tax, even if you're making zero profit or are well below the threshold, even if you're in a free zone, even if you just started, or even if you make only 10 dirhams last year, no exceptions. The UAE introduced corporate tax in June 2023, and so many people still don't understand how it actually works. And here's the truth. The first 375,000 dirhams of profit is completely tax-free, zero tax. That's nearly 100K in US dollars without paying a dirham. Anything above the threshold, just 9%. Compare that to the European countries that have some countries, 31%. Last month, I met with a business owner who was panicking about his tax bill. And his company was making around 500K dirhams in profit annually. And he thought he was paying 9% on everything. Well, we looked at his books and asked him a simple question. Why are you paying yourself so little? And by adjusting his salary to 125,000 dirhams, we reduced his company's taxable profit to exactly 375,000 dirhams, right at the zero tax threshold. And his tax bill went from 45K dirhams to zero. Completely legal, completely ethical, just smart planning. But timing matters, guys. You need consistent, documented salary payments throughout the whole year, not a massive one-time payment in December for Christmas. The tax authorities are smarter than that. Not registering for corporate tax is a 10,000 dirham mistake. I've seen it happen too many times. Don't be that person. You don't want to be there. Oh, and of course, we have accountants and we can help you based on your personal situation. So don't copy this strategy exactly. It might be different for your business. So next one, just get a free zone license. It's cheaper and tax-free. Well, I hear this advice constantly and it makes me want to scream because it's costing people serious money, guys. Here's what they don't tell you. Having a Dubai company means absolutely nothing. If you're running everything from your bedroom in London, it means nothing. Most countries now tax based on economic substance. And that means that where the real work happens, where decisions are made, and where the value is actually created. And listen, governments aren't stupid. Their entire revenue model depends on collecting taxes. They've spent years creating rules specifically to catch people who think they can outsmart the system with a simple Dubai setup. And the OECD guidelines, CFC rules, substance requirements, This isn't some loophole they forgot about. We have too many people on the phone, and for example, an e-commerce business growing fast. This client had a free zone because someone told him this was the tax-free option, and 3 months later, they were still paying full tax in his home country because they were managing everything remotely. And the Dubai company was this a shell, not real substance. One of the biggest misconceptions is that having a Dubai address equals tax savings. But here's the reality, guys. If you're sitting in Germany running your Dubai company from your laptop, guess what? Germany still considers it as a German company for tax purposes. They've built their entire code around preventing exactly this. So you see already, it's happening in most European countries. And the truth is, the choice between, for example, a freeze-end or a mainland company is meaningless if you haven't addressed economical substance. You need real operations, real employees, real management happening in Dubai, not just a fancy address on paper. Make no mistakes about this. Tax authorities have seen every trick in the book. Somebody telling you this isn't true. Probably a salesperson that needs to get some extra commission to hit his targets. Yeah, guys, please be careful. Next question. How do I actually pay myself from my UAE company without problems? Well, this question comes up constantly for our accounting team, and getting it wrong can lead to disaster as well. So let's dive into it. A lot of people do it, build a figure business, and then randomly taking money from his business account whenever he needed it, for example. No structure, no documentation, and then obviously the bank starts asking questions and freeze the accounts for 3 months. 3 months with zero access to his money. You've got two main options, and the smartest entrepreneurs use both, of course. First, you've got your salary, and this is treated as a business expense, which reduces your taxable profit. And it gives you consistency, which banks and landlords love, of course. And when you're trying to get a mortgage or renew your visa, a regular salary makes your life a lot easier. So that was first. Second one, you've got dividends, and these come from your company's profits, so they're not considered business expenses and don't lower your tax base. And the best part, zero withholding tax on dividends in the UAE. And they're flexible. You can pull cash out when it makes sense for you. So that's also a very good one. And here's the optimal strategy. Set yourself a reasonable monthly salary for stability and basic expenses, and then supplement with strategic dividend payments when your business has excess cash or when you have major personal expenses coming up. But don't forget this, the documentation matters more than the amounts, and every payment needs proper board resolutions, dividend declarations, and transfer records, for example. So this isn't just about taxes, it's about keeping your banking relationships healthy. And I've seen way too many entrepreneurs just randomly transferring money between accounts without documentations because they think, hey, it's my company, right? It's easy. But this is exactly what triggers suspicious activity reports and account freezes, unfortunately. So when the bank or tax authorities ask questions, which they will, you need to show them a clear, consistent pattern of properly documented payments. And if you can't, you're in trouble. So make sure you have a good accountant in the UAE that can really help you with this. And if you don't, we're obviously happy to help you with our team. Next one, do I need to register for VAT? And what happens if I don't? Well, this is also a very important question to answer. I get it at least 3 times a day, and for a good reason. Getting it wrong can literally tank your business overnight. And here's a straightforward answer from me. Yes, you need to register for VAT, and if your revenue exceeds above 375,000 dirhams annually, even at 187,500, you can voluntarily register, which often makes sense for B2B companies. But here's what most people don't realize, and that is that VAT registration isn't just about tax compliance, it's about your ability to do business in the UAE at all. And most people don't realize that VAT in the UAE is only 5%, which is incredibly low though, compared to places like Europe, where it can be over 20%, for example. But skipping registration can kill all your deals. And larger UAE businesses often won't even consider working with you if you can't provide a VAT invoice. So they need those VAT inputs for their own filings, their own compliance. And I've seen entire contracts really fall through because of this single issue. Now, what happens if you miss a VAT filing or payment? Let me be crystal clear, guys. The UAE does not play around with fines. Your first missed VAT filing, that's already 1,000 dirhams right away. And do it again within 2 years, that jumps to 2,000 dirhams. But here's where it gets brutal. If you miss a VAT payment, you'll get hit with a 2% fine after 7 days, 4% after that, and then 1% daily until it hits 300% of the original unpaid amount what you owe. Yes, 300%. So technically, the 2% fine applies on the due date itself, not after 7 days. And yes, it left unpaid. The penalties can escalate very quickly. And I've seen businesses completely crippled by these fines, so don't be one of them. You don't want to be on that side. Another question, what exactly is this transfer pricing everybody keeps talking about? Well, let me tell you a secret that most accountants won't tell you until it's too late. If your business deals with related parties abroad, whether that's your own subsidiary, a sister company, or a partner you're closely connected with, you need transfer pricing. I was literally talking with a client 10 minutes ago about transfer pricing, and everybody thinks we're all part of the same group, so why should I care about what prices we charge internally? Well, 3 months later, he got a tax audit, and the result, an additional tax bill over $30,000 because he couldn't prove his internal prices were market-based. And transfer pricing isn't just about having some paperwork. It's about being able to prove to the authorities that the prices you charge in transaction between connected companies are comparable to what independent parties would pay, what we call arm's length. I see this scenario every week. An entrepreneur successfully builds international operations but fails to maintain proper transfer pricing documentation. And then the tax authorities come along and assume you're artificially shifting profits. And before you know it, you're facing double taxation and penalties that completely swallow all your profit. And the worst part, all of this could have been prevented with the right preparation. So before I wrap it up, let me give you a bonus. The exact compliance calendar we use with our clients. And this will save you from missing critical deadlines that could cost you thousands. So every month, match your bank records with your books and log all cash in and out. We use Zoho and Xero to automate this. But trust me, trying to catch up in 12 months of transactions all at once is a nightmare. I've seen people literally pull all-nighters before deadlines. And every quarter, file your VAT return by the 28th of the month following the end of the quarter. Include total sales, expenses, output VAT, and of course, input VAT. And annually, prepare financial statements and file for your corporate tax return within 9 months after your financial year ends. And of course, ESR filing, due by December the 31st, each year for most companies. Economical Substance Regulations. ESR. Say this calendar, it's the difference between smooth sailing and massive stress. So running a business in Dubai isn't hard if you know what you're doing, but doing it wrong is very expensive. And we see it all the time. People paying more tax than they should, getting hit with completely avoidable fines, losing banking relationships, or missing out on huge opportunities for their business. All because they didn't get the right answers to these 5 critical questions from the beginning. In Emifast, we help you set everything up properly from day 1. Tax registration, salary and dividend planning, licensing, audits, compliance, the whole package. We handle all the complexities so you can focus on growing your business. And if you found this information valuable, do me a quick favor and hit that like button and subscribe for more videos on UAE business strategies. This helps us reach more entrepreneurs who need this information. And also, drop a comment with any other UAE business questions you might have. I personally read every comment and your question might be featured in our next video. So click on the link in the description if you want to book a 30-minute strategy call, and let's make sure you're not leaving money on the table. Thanks for watching, and I'll see you in the next video.